Could you imagine a world without cash? This question might seem a bit far-fetched, but it's one that we need to seriously consider as we stand on the brink of a potentially transformative shift in our global economy. Today, we're delving into the intriguing question: what will the role of cash be in the future? Cash, those tangible notes and coins, have been the bedrock of our economy for centuries, a constant companion in our daily lives. Yet, the world is changing rapidly, and with it, our methods of transaction. Today, we see a growing trend of digital payments, a wave that is sweeping across the globe, turning traditional financial norms on their heads. We're living in an era of contactless cards, internet banking, mobile wallets, and cryptocurrencies. It's an era where you can pay for your morning coffee or transfer money to a friend halfway across the globe with just a few taps on your smartphone. As we embrace these new technologies, the use of cash has begun to decline. But what does this mean for the future of cash? Is it destined to become a relic of the past, a nostalgic reminder of simpler times? Or will it adapt and evolve, finding its place in our increasingly digital world? The future of cash might not be as straightforward as it seems. As much as we love the convenience of digital payments, cash still has its unique advantages. It's tangible, it's universally accepted, and it offers a sense of privacy that digital transactions often lack. In some parts of the world, cash is not just a medium of exchange, but a symbol of trust and stability. For many, it's a lifeline, a means of survival in economies where digital infrastructure is still a distant dream. So, as we stand on the cusp of this digital revolution, we need to carefully consider the role cash will play in our future. Will it fade into oblivion, or will it adapt and coexist with digital payments? As we delve deeper into this topic, it becomes clear that the future of cash is not as straightforward as it might seem. Cash has different roles in different parts of the world. Let's take a quick global tour to understand this better. In Japan, a nation known for its technological prowess, the tactile allure of cash remains strong. Many attribute this to cultural factors and a deep-rooted societal trust in paper money. The Japanese government's efforts to promote cashless payments have been met with resistance, proving that the transition to a cashless society isn't always a straight path. Then we have Germany, where the phrase Geld stinkt nicht, or money doesn't stink, is popular. Germans have a strong preference for cash due to a history tinged with economic instability and a cultural preference for privacy. Despite the rise of digital payment methods, cash continues to be king in the land of beer and bratwurst. On the other end of the spectrum, we have Sweden. The Swedes have embraced the digital revolution with open arms and are on the fast track to becoming the world's first cashless society. Cash transactions in Sweden are now so rare that many shops and restaurants no longer accept paper money. The trend is largely driven by the widespread use of mobile payment apps and a desire to reduce crime rates. China, too, is sprinting towards a cashless future, spurred on by the widespread adoption of mobile payments. Platforms like Alipay and WeChat Pay have changed the way transactions are made, making cash seem almost archaic. The convenience and speed of digital payments have won over the Chinese population, making China a frontrunner in the race towards a cashless society. So you see, the global cash scene isn't uniform. It's a colorful mosaic of varying degrees of digital adoption, influenced by a range of factors such as cultural preferences, historical experiences, and technological advancements. The global cash scene is diverse, showcasing a spectrum of adoption rates for digital payments. While it's easy to get caught up in the digital wave, let's not forget the unique advantages that cash offers. Firstly, cash provides a level of anonymity that digital platforms simply can't match. When you pay with cash, there's no digital trail, no data to be mined, no record of your purchase. This anonymity can be a crucial factor for many, serving as a bulwark against potential data breaches or invasions of privacy. Secondly, cash doesn't require any technological infrastructure. It doesn't need electricity, internet access, or a sophisticated gadget to function. In a world increasingly dependent on technology, cash remains steadfastly independent. This makes it a reliable option in remote or underdeveloped areas where digital access is limited or non-existent. Moreover, cash is often easier for certain demographics to use. For the elderly or those less technologically inclined, the tangibility and simplicity of cash can be a comfort. It's a system they understand and trust, one that doesn't require them to navigate the sometimes overwhelming world of digital payments. But like all things, cash isn't without its drawbacks. One of the significant issues with cash is security. Cash can be lost, stolen, or damaged beyond use. It doesn't come with a password protection or a customer service hotline to call in case of a mishap. In addition, there are the costs associated with printing, securing, and transporting cash. These can be substantial, especially when you consider the life cycle of a banknote. From design and production to distribution and eventual destruction, each stage incurs costs that are ultimately borne by the taxpayer. Lastly, cash can also be a conduit for illicit activities. Its anonymity, while a boon to privacy-conscious individuals, can also facilitate transactions that are less than legal. Clearly, cash has its unique benefits and drawbacks. But as we contemplate the future role of cash, it's essential to weigh these factors carefully. After all, the financial landscape is ever evolving, and what works today may not necessarily work tomorrow. On the other hand, digital payments are revolutionizing the way we transact. As we venture further into the 21st century, we're witnessing an unprecedented surge in the use of digital payments. This isn't a mere fad, but a fundamental shift in our monetary transactions. Just think about it for a moment. When was the last time you handed over a wad of bills to pay for a purchase? Or wrote a check? For many, the answer may be quite a while ago. This is because digital payments, through their sheer convenience, speed, and efficiency, are becoming the norm rather than the exception. Let's start with convenience. Digital payments eliminate the need for physical cash, making transactions as simple as a few taps on a smartphone or a click of a mouse. No more fumbling for exact change or waiting for the cashier to count out your bills. Even when you're miles away from your loved ones, you can send money instantly with digital payments. Speed is another major advantage. Digital transactions are almost instantaneous, saving precious time in our fast-paced world. Whether it's paying for a cup of coffee or transferring funds across borders, digital payments make it happen in the blink of an eye. And let's not forget about efficiency. Digital payments streamline financial management with automated records, easy tracking, and instant notifications. They also reduce the cost and environmental footprint associated with printing, transporting, and storing physical money. However, it's important to acknowledge the concerns associated with digital payments. Privacy and security are key issues. The risk of data breaches and cyber threats cannot be ignored. Also, access to technology, particularly in underserved communities, can be a barrier to digital payment adoption. Digital payments, while not without their challenges, represent a significant shift in the way we handle money. This transformation isn't just about ditching cash. It's about embracing a more connected, efficient, and inclusive financial ecosystem. And as we move forward, it's crucial to ensure this digital revolution benefits everyone, everywhere. So, what does the future hold for cash? This is the question that has been on everyone's mind lately. As we delve into the future, we see several possibilities unfurling before us. One prediction is a world completely devoid of physical cash. Imagine a future where your wallet is entirely digital, with every transaction, from your morning coffee to your monthly rent, all happening through electronic means. This isn't a far-fetched scenario. With the rise of digital wallets and cryptocurrencies, we're already stepping into this reality. It's a world that promises convenience, speed, and a new level of financial inclusion. Yet, another scenario is a balanced coexistence of cash and digital payments. There's a certain comfort and tangibility to cash that might make it stick around. In this scenario, cash doesn't disappear. Instead, it adapts and evolves. We might see cash becoming more sophisticated, with features to enhance security and ease of use. Digital payments and cash would complement each other, catering to different needs and preferences. And then, there's the possibility of a resurgence of cash. It might seem counterintuitive in this age of digital revolution, but let's not forget the vulnerabilities and inequalities that come with the digital world. Not everyone has access to digital banking or understands how to navigate it. cash gives a sense of control and privacy that digital payments often can't. So it's plausible that in certain regions and communities, cash might make a comeback. These predictions are not mutually exclusive. They could all happen in different parts of the world, at different times, influenced by a multitude of factors like technology, infrastructure, culture, and legislation. The future of cash is uncertain, but one thing is clear: the way we think about and use money is changing. It's an exciting time, filled with opportunities and challenges. As we move forward, it will be fascinating to see how these predictions pan out and shape our financial landscape.